Join us now to talk about the state of the global economy. Former World Bank President David Malpass. He is now with Purdue University's Mitch Daniels School of Business. It's good to see you.
Good to see you, Joe.
Do you ever get interviewed by Besant because your name was bandied about at one point, right?
Right, I wasn't interviewed for the job. I do think, and I've made the point in Wall Street Journal articles and so on, that the Fed needs to really look at reform. So I was super happy to see Secretary Besant in both in the Journal and in his international economy article talking about the reforms. You know, for over 10 years, I've been talking about the problem of QE, that it's not stimulative and it causes this wealth inequality. So you're borrowing on the short end and dumping it into government bonds. How is that going to work out? So he really nailed that in what he was doing in August.
Yeah. Okay, but so you don't know if did you hear wind of your name being bandied? I mean, you heard wind of it, obviously, but you know if there was where there's smoke, there's fire. Would you do it?
So of course I'd do it. You know, the country really needs leadership across the board, and the Fed, I think, really is, and I've said this, part of the deep state. The staff is huge, way too big. They control a lot of markets. I've written a lot over the years about the loss, the cost of losing the interbank market and the Fed funds market. You know, there kind of is a residual Fed funds market, but it's all the Federal Home Loan Bank Board arbitraging the interest rate. It's of no use to growth of the country. So there's so much more that the Fed could be doing to allow markets to function. And that's now this issue on stablecoins. You know, the Fed's really been skeptical of allowing anybody else to be involved in short-term markets, and stablecoin comes in, says we can do it a lot better than what's been doing, and the Fed's really been dragging its feet. So I'm happy to see some talk of this. Chris Waller was out yesterday talking about a skinny master account. I think that's a direction, and the Fed needs to be open to a lot of change.
You could have some really nice digs. Did get to be
$3 billion worth of
really unbelievable food. I understand too.
I've had really nice digs.
You already got some nice digs. That's not going to do it for you. So you point out you're always trying to urge or influence policy in certain ways. I was struck. You'd like tax cuts in Japan and as well as here. Why?
The world needs more growth. That would be really good for the U.S.
And Japan. And you might get it from this new...
It would be fabulous for the U.S. to have more growth in Japan. So they've got a new government. But what they're looking at, and this is what I worry about across really the world, is institutionalism is deeply embedded. So the central banks don't want to change. The fiscal authorities think that high taxes are in some way going to make their country better. And Japan has a 45% marginal tax rate on personal income. They have a VAT tax. And so if you were living and working in Japan, you'd be disappointed in the outlook, which is what they're showing. But I'll go broader than that. I mean, I think there are opportunities around the world for governments to break out of the mold.
Yeah, and then you sound like a kind of a supply sider, and I'm not disagreeing with you.
Well,
certainly,
let's talk
smaller
about
government, ending spending on climate, more energy, more fossil fuels, ending any renewable.
What history shows us on development is the more energy you use, the higher your per capita income. Somehow that got off track, way off track over the last 10 years. So the U.S. is leading in the world, and President Trump is leading on saying we're going to have more energy here. That's necessary for the confrontation with China. I want to come back to taxes. The capital gains taxes in the U.S. are too high. The unrealized gains locked up in the U.S., where people are just waiting for basis step up at death. It's way too much money, and it reduces the dynamism of markets. So my main theme is just that markets all over need more dynamism, and that's why I mentioned the interbank market.
That's totally against the pressure, right? make more, to raise capital gains taxes, right?
Seems like that's the case, right?
Yeah, that's...
Well, let's take a thought experiment. Let's say you lowered the capital gains rate down to 10% right now for 1 year or 2 years. The government would make a giant windfall. They could use that to really build things or to reduce the deficit. That would be wonderful. And what have you lost? The people are going to hold it until death and get zero.
Unless you change
rate.
that.
So you have to change the state taxes. Don't you think you have? You don't agree with me? I think you have to change the estate tax.
Yeah, but Britain is trying that right now. So that
Right.
they say let's tax the rich people. So what happens? The rich people leave. Washington State is doing that, and it's been a disaster for the state of Washington because people figure out exactly when they have to leave before getting caught.
Over the estate.
It's a wealth tax. They have this wealth tax.
Right.
That's a huge deal. That's pushed people out. But leaving a state is different than
leaving a
the
country.
United States. And Britain may be doing this, but
Well,
I would argue that
I'm
the
just
United
saying,
States
if you try to tax people's wealth, it will all of a sudden be somewhere else. It won't be where you can get your hands on it. So you're saying, oh, people are stuck in the U.S.
No, I'm not saying they're stuck in the U.S. I'm just suggesting most people are stuck in the. Actually, I am saying that.
Most people
are stuck in the U.S. and they want to be here.
Most people want to live in the U.S.
I don't know if I'm going too far, but when the reconciliation bill passed, the stock market started going up. Why? Because it made the estate tax permanent, and so people could look at it, plan their future, and figure out how to reinvest. And so equities, the minute that you say that there's a lower tax rate, equities go up because they're reflecting growth. And that's an opportunity for the U.S.
If it was really a holiday of 1 or 2 years, though, don't you think it would be extended? And if that's the case, it kind of defeats the purpose of...
No, it doesn't defeat. So let's say you get the windfall in the first 2 years, and then people say, this feels so good, we're gonna make it longer and longer, make it permanent. That's what's happening on the expensing right now of equipment. Yeah. So it was originally temporary, and so people met the window, and then they say, wait a minute, now this is really working really well. We're getting growth and jobs out of it. So we need to do lots more of that. I think, and this is what people in markets are talking about all the time. The national debt is just too big, so people won't keep buying dollars. But I don't think that's right. I was happy to see gold down again this morning. It had gotten overdone in its surge and its bubble, and having it come down is more people saying, "I want to be in the U.S. at these interest rates. They're just too high." We've got the short-term interest rates at 4.15% from the Fed. Why set them that high? I would like to see a 50 basis point cut in the next meeting because they should have started cutting in June. They've been delaying and delaying the cuts, and so they're not getting ahead of the curve on the cuts. And the bond yields are below 4. So why would you have a short-term rate above a long-term rate at this point in the cycle? It doesn't make any sense. Yeah. So the Fed's behind the curve. They could catch up and save the government a lot of money because the government's the big borrower of treasuries. Right.